Good morning, everyone. Thank God it's Friday. I hope you have a good day and a great weekend ahead. This is your market update. US stocks rallied Thursday in a volatile trading session marked by dramatic swings as investors weighed weak economic data on the one side, rising tensions with China against the broad pushes to reopen the economy. The rally in the index was driven by large gains among stocks in the financial sector, which have slumped this year as interest rates have fallen off. American Express jumped about 7.4%. JP Morgan was also up about 4.2%. Sectorally, financials was the big driver, 2.64% positive. Consumer discretionary, information technology, materials and healthcare were all up about 1%. In fact, all sectors were positive except for consumer staples, which was slightly negative. Treasuries extended their rally, taking the 10-year yields down near 0.62%. Gold climbed to 1731 and Asian equity futures are higher. Oil surged to the highest in more than 5 weeks in New York amid bullish signals. So a couple of things happened which really drove the performance. So WTI is up 9.8%, closing at 27.77, while Brent is above 31 handle, so 31.42. OPEC reduced exports by 5.96 million barrels a day for the first 14 days of May. This is according to Petro Logistics. BP said consumption has surged back this year as cars return to the roads, so boost in demand. And this comes after Saudi Aramco cut sales to US and Europe by about half, and IEA said that the outlook for global markets is improving with demand a little stronger than expected. So positive signs for oil both on the demand and the supply side. President Trump said he doesn't want to talk to Chinese President Xi Jinping right now and mused about eliminating the largest trading relationship in the world. He told Fox Business that he's very disappointed in Beijing, won't renegotiate the trade deal, and information on China and the virus is not good. The US is also looking at Chinese companies on the NYSE and NASDAQ that don't follow its accounting rules. Again, jobless claims data came in yesterday. Another 2.98 million Americans filed for unemployment benefits. That was more than the consensus of 2.5 million and bringing the 8-week total to 36.5 million. Bloomberg Economics predicts that as some states gradually reopen, the filing should fall more quickly. China data on the dock today. The fixed asset investment, industrial production and retail sales will be coming out. The forecast is that China's post-lockdown economic recovery probably has gained steam on the production side in April, while consumption is lagging as real incomes fell and people avoided social events. So consensus is for the factory output to have gained about 1.5% from a year earlier, flipping the decline that we saw in March. And the drop in retail sales to moderate to about -6% from a 15.8% decline that we saw earlier. Fixed asset investment may have fallen by about 10% is what the forecast is. More details on Mr. Modi's mega stimulus package came out, which is touted to be 10% of the GDP. But it continues to suggest that no significant boost to fiscal spending in the current year. The measures announced so far focused on credit guarantees and interest subsidies, which would boost the availability of working capital for the broader economy as economic conditions are lifted, but won't do much in terms of stimulating demand. Moving on to equities, some deglobalization kind of trends. Taiwan Semiconductor is planning to build a multi-billion-dollar chip plant in Arizona. A potential realignment of global trade designed to ally the US concerns over supply chain security. So TSMC has negotiated a deal with the Trump administration to manufacture semiconductors and produce sensitive components domestically for national security reasons. Applied Materials was the latest tech company to avoid giving a forecast for the current period. Second quarter sales and profit also fell short of estimates. The company's results and guidance are typically important indicators for future demand in the electronic industry, but they're not giving any forecast. Moving on to rates. Powell said that there's no possibility for having negative rates, but wagers are that he will eventually relent. That remains the game, at least in the euro dollar option traders world. Now, calls that pay off if the Fed sets the low end of the Fed funds target range below 0% between September 2020 and June 2021 have been in steady demand over the past 2 weeks. The most popular position looks for a rate cut of about 10 basis points to 15 basis points by September. But this week, demand has picked up for options that offer protection against a policy rate as low as negative 0.50%. Remember, we are talking about the US the federal funds rate, or the Fed funds rate, by the middle of next year. Right? Now, moving on to Forex, the US dollar extended its gains against all major currencies. Some market watchers are attributing the dollar's rise to President Trump's support for the greenback because in an interview this morning with Fox, he said, it's a great time to have a strong dollar. Don't ask me why he said that, but that's what he said. The weakest currency is the Australian dollar. Approximately 594,000 jobs were lost in April. This is the worst ever for Australia. More than 220k of those were full-time. The rest were part-time. The decline in the New Zealand dollar was also expected considering the dovishness that we saw in the Reserve Bank. However, the government unveiled a 50 billion fiscal stimulus package to support the economy, so that will help ease the burden on RBNZ. US retail sales coming out later today, Euro GDP numbers coming out later today, University of Michigan's consumer sentiment is also coming out later today. US retail sales may show a second straight drop in April. Consensus is for a 12% decline from March. Layoffs and stay-at-home orders have really reduced paychecks and discretionary spending. That is your market update. Have a wonderful day and a great weekend ahead. I'll speak to you on Monday. Thank you very much.